Alright, in this video I will create a new vendor, enter a bill, and pay the bill. Just today I received an invoice or a bill from T-Mobile. So this will be our example. So to create to create a new vendor, you just click on vendors at the top. You want to go to the vendor center. This is the long way, by the way. And you go new vendor. You can fill in as much information as you want or as little information as you want. But the minimum amount of information is the vendor name. And for my case, I'll just go ahead and do that. T-Mobile. I want to also do the account settings. What this does is QuickBooks will pre-populate the expense account that whenever a vendor, you create a transaction, QuickBooks will choose this as the default account. Since this is T-Mobile, I will select telephone. This really helps with entering in lots of information because QuickBooks pre-populates for you, so you don't have to type in telephone every single time. Alright, that's how you create a new vendor. To enter a bill, just go vendors, enter bill. Notice how QuickBooks created a new account called the accounts payable. This is because when you receive the bill and you are entering in QuickBooks, QuickBooks recognizes that you owe that amount to your vendor, to, in this case, T-Mobile. You owe that amount, but you haven't paid for it yet, so it's a liability that you have to pay later. So for here, we'll just go T-Mobile for the vendor, put in the amount due, 102.76, the due date. I'm getting all this information from this bill I received from T-Mobile. 2/13/14 is the payment due date. So 2/13/14, not Friday the 13th. It's a good bill then. And notice how the account is pre-populated with telephone as the expense account. And that's correct, and we did that. We saved that information in the vendor information, and that's right. Just if you ever need to change it, you can go ahead and click and change, but in our case that's correct. And save and close. There it is. 102.76 is our bill. It's being booked to accounts payable right now. And to pay that bill, we just go to vendors, pay bills. And that's the bill that we just entered, the only bill that I have so far. So payment date, you just select whatever payment date that you are paying it on. For me, I'll just leave it to today. The method, there are two choices. You can pay it by check, and that's coming from your bank account, or you can pay that by credit card. I generally pay all my bills with credit card just so I can get the cash back. So we'll just go ahead and select credit card and pay selected bill. And QuickBooks gives you a payment summary. Close. And the 102.76 from accounts payable got moved to the credit card account. So we no longer owe T-Mobile. We now owe Wells Fargo. So when I get my Wells Fargo bill, I will be paying that using my from my Belco account, and that would be another bill in the future. Let's look at our profit and loss statement or income statement really quick. I don't know why they call it profit and loss. You either have a profit or you have a loss. You don't have a profit and a loss. Just my 2 cents for QuickBooks Intuit. So far this year, there you go, revenue, my commission check, the buyer rebate that I gave back to the buyer, and my telephone expense. So far so good. And that concludes our video.